Okay, we have another one to talk about. They've literally just created a new product called the Interval Fund. Now, they put this in the works back in 2019. They've been testing it as of February of this year, and it looks like it's getting ready to be launched on March 28th of this year. So, what this was posted September 2nd, 2021, revised today, or I'm sorry, March 18th, 2022. And this involves wealth management services, mutual funds, and attention, manager mutual fund operations, manager data processing, manager cashiers, manager P&S department. Subject is FundServe, which is a product of the DTCC. It's a trading method that they use. And it also involves the mutual fund profile security enhancements, interval fund processing. Effective Monday, March 28, 2022, pending regulatory approval, of course. The NSCC will implement enhancements to FundServe and Mutual Fund Profile Service 2, which is Profile Security, in order to support interval fund repurchase processing. Interval fund repurchase processing. Let's get into this. So, what is this? NSCC, in collaboration with the Interval Fund Task Force of the Investment Company Institute's Broker-Dealer Advisory Committee, identified FundServe and profile security enhancements to address operational challenges processing interval fund repurchases. The enhancements identified by the task force will reduce inefficiencies and operational risk related to the interval fund repurchases. The enhancements summarized below will be included in this release. Details illustrating the specific enhancements are included in the attached appendix. I'll link this below. Now, what mean? Well, March 18, 2022 revisions are highlighted in yellow on page 15, section 5. You can find all the information on this at these two links right here in the filing. See how good filings are? So one of the white papers that they wrote this on in June of 2019, the timing, of course, interval funds, operational challenges in the industry's way forward, ICI Broker/Dealer Advisory Committee, Interval Funds Task Force. The fact that that even exists is disturbing. Now, what is this? Interval funds are continuously offered closed-end funds that redeem shares by making periodic repurchase offers, tenders, or redemptions at the net asset value in compliance with the SEC Rule 23C-3. They differ from other closed-end funds that do not offer regularly scheduled liquidity, or shares are generally sold on a secondary market at a price that could be at a premium or a discount to the NAV. So again, they are sold on a secondary market at a price that could be at a premium or discount to the NAV. Interval fund purchases resemble open-end mutual funds in that their shares typically are continuously offered and priced daily. Interval funds offerings are growing rapidly in the mainstream market, placing stress on current industry capabilities to efficiently and effectively support interval fund operations. These headwinds are felt across the servicing environment, arising from interval funds' unique combination of operating characteristics that do not fully align with the prevailing technologies and related service models used for either closed or open-end funds. So why categorize it as that? Disjointed processes, manual strategies to compensate for lack of automation, and inefficient processing models are a direct result of these factors. Bullshit. Anyways, product features. Attributes of interval funds. Interval funds hold a unique combination of attributes between traditional exchange-listed closed-end and open-end mutual funds. The following table compares interval funds with these other two categories of funds and highlights where the product operational similarities most closely align. So, with a traditional closed-end fund, it is not continuously offered. Interval fund, it says typically, which means obviously both. Then an open-end fund is yes. SEC liquidity rule, of course, it does not apply to interval funds. Illiquid assets allowed, 75 to 95% for the interval fund. Trade pricing and valuation is end-of-day NAV. So what do you see at the end of the day for a lot of tickers? Extreme amounts of volume. I guarantee you that's what this is. Part this, part ETFs. They don't trade during the day because they're mutual funds, so they got to price the NAV EOD. This is what we see in ETFs. So commissions and distribution fees, subject to FINRA Rule 2341 with a super note on it. That's cute. Liquidity is periodic. Repurchase fees are up to 2% permitted to cover fund expenses related to repurchase. And repurchase offer limit, traditional closed-end funds, does not apply. Open-end funds, repurchase offer limit does not apply. But for the interval fund, we got 5 to 25% limit. Now, asset managers often strive to differentiate their interval fund products by offering distinct product features. Most notable, now pay attention to this, most notable, right, is the use of subscription intervals, which are used by a small number of interval funds to receive subscriptions at certain times. Remember that sentence. Most notable is the use of subscription intervals. Presently, AIP, which is another methodology of trading these products, can support subscription intervals, while FundServe requires all funds to be continuously offered or priced and available for daily subscription. Some interval funds are offered under a traditional sales load schedule where front-end commission is paid when acquiring shares. FundServe, which is offered by the DTCC, has very robust support for multiple commission models. AIP has more modest capabilities in that regard. So remember this sentence here. It's the most notable use is the subscription interval. So, scheduling repurchase and subscription periods. A fundamental characteristic of interval funds is the use of repurchase periods when the fund will buy back shares held by shareholders, set by number or percentage of outstanding shares. So, this is another thing I've been theorizing all year, that all of this institutional buying and selling we see is all just a percentage of the outstanding shares, which basically that's what we see here. Now, remember what I said earlier about that sentence? Less commonly used, but also available, are subscription periods when shareholders can purchase shares from the fund. The end of each interval period coincides with the repurchase processing date or the periodic subscription processing date, respectively, when shares are transacted and shareholders' accounts updated. Now, hold on here. So, the previous slide, you literally just said, most notable is the use of subscription intervals, but then you also say less commonly used is the subscription intervals. So which one is it, DTCC? Most or least? Pick one. Now, fund managers select repurchase and subscription frequency dates and durations based on product needs and other factors such as managing portfolio liquidity. When selecting periodic subscription repurchase periods for an interval fund, they're telling the industry basically consider the special handling required operationally by all counterparties, which are funds, intermediaries, and service providers, to support each period. Some of those include the following: enabling system processing of certain types of transactions when a period begins and systematically blocking them when period ends. These changes may be required on the shareholder record-keeping system, for example, transfer agent system, as in DRS, broker-dealer subcounting system, as well as for trading methods used by the interval fund and are designed to avoid incorrectly accepting transaction activity outside a repurchase or subscription period. Updating personnel that they could accept trades during an open period, including updated phone scripts and changes to voice response recordings and shareholder self-service trading options through online internet-based trading. Ensure all trading deadlines are understood throughout the operation regarding order delivery to the fund, order processing by the fund, and any need by the fund for proration. Now, what's interesting is you got supernotes back there. Supernote 7, where did that go? Where'd it go? Yeah, right here. Most interval funds are continuously offered, meaning they have open-end subscription periods. For these interval funds, subscription period comments largely do not pertain. In some instances, shareholders' requests in response to a subscription or repurchase offer may exceed the allotted number of shares permitted by the offer. In those instances, shareholder instructions in good order will be subject to proration. All requests will be proportionally adjusted so they, in total, equal the total maximum shares the fund offers during the subscription or repurchase period. Corresponding shareholder transactions are processed for the adjusted amounts. So how about that? Interval funds. They started testing these a while back, but they're going to be implementing them pending regulatory approval on the 28th. Oh, check this out. Repurchase offer life cycle. Step 1, fund board approves repurchase offer. Step 2, and at this point we're taking up to 3 business days between step 2 and 3. Step 2, the fund notifies shareholders of repurchase offer and its deadline. Step 3, fund files SEC form N-23C-3. This is a 3-day period. Now we're in step 3 and 4. Now between step 2 and 4, it takes 3 to 6 weeks notification of repurchase period and deadline. So step 4 is repurchase period ends. Repurchase request deadline reached. That took a total of 6 weeks up to. Next step is step 5, repurchase pricing day. All orders delivered and processed. This is 0 to 14 days to calculate the NAV from between step 4 and 5. And then between step 5 and 6, you have a week between repurchasing pricing day and the last step, which is repurchase order settlement, where shareholders receive repurchase proceeds. Because of the many steps involved in trading interval fund shares, the method for trade submission is especially important from both an accuracy and an efficiency perspective. The following section considers the method for trade submission used by industry participants. They have the AIP solution, they have the fund serve solution, and they have the transmissions and internet portal use through the FTP websites. So I'll leave this below if you want to read it. That's basically interval funds. They're coming. It's a new product of crime likely, so get ready.